Yo, what's up, guys? I'm back with another informational video for you guys. Today we're going to be talking about time and price. Time and price is very important. If you haven't really focused on what time you are based on your time zone and everything like that on TradingView, I know most people just know about the change your time and stuff like that. But if you haven't, make sure you adjust your time to the time that you are based on your time zone, because time and price is very important. This is not the most accurate thing. I mean, you could really just go on Google and search up exactly what time the London session overlap in New York. There's pre-London. We're gonna talk about London session overlap, New York session, because these right here and pre-London, you can trade pre-London too, but these right here are the most volatile sessions. And around these times, this is based on Eastern Standard Time, by the way, New York Eastern Standard Time. So you can adjust your time to this, but this right here, these times right here is the most volatile times. These right here are the times that you should be trading in. You don't have to trade every one, but if you can't catch one, trade the other one. You feel what I'm saying? So I know me personally, myself, I trade overlap mainly. Overlap and New York. I don't catch all of New York. Really, I stopped trading New York at 10, 11, 12 p.m. Eastern Standard Time. So just overlap in New York. London session, I would trade London session if I could, but it's too late around my time to trade it. I know some people are lucky and they can trade it. They can trade all these sessions. Asian session does not have any volatile movement. Asian session is really a setup session. Asian session will show you a great setup, and then once London session opens at 3 a.m., it just erases everything. It's Asian session didn't even matter, because they'll just spike a candle or just grab some liquidity from Asian session and just take everyone out. So that's really the main reason I didn't include Asian session in here, because Asian session really doesn't matter, to be honest. Some pairs, you can trade it on the Asian session pairs, the CHF, not the CHF but the JPY pairs. Sometimes they'll move and stuff like that, but it's not really the consistent movement that you see in London, overlap in New York. How I want you to think about it is, if you go and back test your charts, I want you to peep at what specific times does order blocks and manipulations, Wyckoff and everything, just take a look and focus on what time those things happen. And what you'll find, surprisingly, well, not surprisingly, you'll see that most of the time these manipulations, impulsive movements, etc., imbalance, order blocks, POIs, everything, these mainly happen during these times. Most of the time it'll happen open of London session, you got the open of New York session, you got overlap. So that's basically, because why these happen during these times, because all these sessions work with each other. So if London session creates a manipulation, New York's overlap in New York session is going to carry out that manipulation. So let me give you an example. Okay, boom, let's say this is Asian session, right? Because man, most of the time that's what Asian session looks like. Let's say this is Asian session, okay? This is what this is what London session will do. It'll spike, take out the people selling, take out the people that's buying. It'll take out both sides, okay? Now, once London session does this here and manipulate the people out of the move, you have two more things that's going to happen. Okay, then we have overlap. Overlap is either going to start retracing and respecting this move here, or respecting whatever order block or whatever demand, whatever was held here, and by the time that New York session opens, boom, you'll get another spike, taking out whoever was buying down here or whoever was buying at these little lows, and then another quote-unquote order block, mitigate, and then continue to the upside. That's a perfect scenario of how these sessions work about each other. Now, just because, one thing I want to mention is, because it happens a lot, just because London session does this and manipulate these people, it doesn't mean by the time New York session comes, they could just boom and continue down. So what I want you to see is, if the market's in a pro trend, right? Let's say daily time frame, we're going to the upside, and London creates a low, then by that confluence of the daily time frame being bullish, you could expect New York to continue that bullish price action. Focus on, but just back test it, like back test it and see if I'm not capping or not. Like most of the time when you see these moves happen, they're going to be happening either London, overlap, or New York, like all the time. Like there's no doubt about it. So I'm just go over some markets. I'm gonna just show you like right now. Like I don't even have to go anywhere far. Hold on. So I'm on the 4-hour time frame right here. This was a point of interest right here. What time did we tap into it? 1 a.m. Now 1 a.m. right here is pre-London. 1 to 3 is pre-London. So I mean, I guess that doesn't really count, but right here, what time is this? This is 5 a.m. That's that London session right here that we came back and tapped into this area. Let me see. Let me go on a different market. Well, NU. Right here we have a little supply candle right here. Time 5 a.m., 9 a.m., London, New York. That's the time that we came in here and tapped into this area. Let's see. Let me go to USD CAD. Let's look at these times. What time did we mitigate? Like, not mitigate, but what time did we manipulate this area? 9 a.m. New York. What time did we tap back inside here? 9 a.m. New York. 9 a.m. New York. 9 a.m. New York. Look at all these mitigations, bro. This happened at 9. This happened at 9. This happened at 9. All these happened during New York session. So, like I could really just go all day just showing you these things. Like, let me see. We had another supply zone right here. Distribution came in at what time? 5 a.m., 9 a.m., London, New York. Same thing over and over again, bro. So without going too in detail with it, that's basically what time and price is. Just know what time, like your markets, know what time you're trading your markets. It's like if I have a market and I'm looking to buy it or sell it, I'm most likely not gonna want it to buy or sell it during Asian session. Why? Because I know that I could get more volatility inside of London session or New York session. So if you have like a supply or demand area and you see that it's about to like react inside of it during London or New York, you have more confluence knowing that most likely I'll have a great reaction from this area because of manipulation. The markets will be volatile. I know that I'll most likely see a good setup during this time because I'm having much more movements, much more fluid movements during these sessions instead of having this weird choppy Asian session look. So I don't really want to go too in depth with time and price because it's not nothing to really complicate. It's something to really just keep simple. So I'm gonna just keep it as simple as I can, and I'm gonna just like what I've shown you is basically how you want to look at time and price. Just notice at what times the market does certain things like manipulations and stuff like that, and you'll be all right. Like right here was pre-London. Come on, bro. It's like it's the same thing over and over again. Like time and price, everything. The markets work in a certain order, and once you figure out that order, you can start connecting the dots together. Like you connect time and price together, you connect the point of interests, the supply and demand, you connect the order blocks and the distribution accumulation. If you have all that and you have time and price, and you see that, okay, let me give a prime example. Let's look at this right here. So this was right before pre-London, this spike up. And I know this area was a significant area is because we had this candle right here, because this right here was a reaccumulation. I don't want to draw out the whole thing because there's no need to. But this right here was not mitigated, and I know this right here was a demand area. Now we're reacting inside of this demand, but after this reaction, we came down. So I know because of this reaction inside of this demand area, we had buyers try to buy this here at the demand, but the sellers were just too strong. So that's giving me the confidence that knowing, okay, sellers are still in this market. And right here, this right here is a new supply area because sellers got into the market right here. Buyers were not strong enough to keep this going back to the upside after reacting to this demand area. So that's another type of way you want to look at these. Like if you see an area reacting to demand and it fails, this becomes your new supply, okay? And you see we came right back to this area and reacted off of it because we had orders inside of here left over from people buying and the sellers getting in and continue to push them down. And after that, we broke structure. So that's another confluence. So right here we have a POI supply basic. So we're gonna scale in right here. And let's see what time the market comes inside of a point of interest. Was that this is 8. This is right before, this is during overlap right before the open of New York session. This is prime time. This is where you're in the market, you're looking for entries, bro. Like seriously. 8 going into New York open right here. This is overlap going into New York. So right here is a prime time and the market's getting inside your point of interest, okay? Perfect time to scale in. Let's see what confirmation entries we can catch in this area. Let's see if we see a distribution or anything of some sort inside this area that could give us confluence to take this trade, right? We're gonna go down 5 minute. You don't see anything clear yet. I'm gonna stop it right here. Okay, let's keep going down. All right, you're starting to see something now. I mean, the people that trade Wyckoff, you're starting to see something right here. You go to the 1 minute, you're starting to see something right here. Now, I don't know who has the seconds time frames or whatever time frame you have. This right here is a Wyckoff schematic. This in here personally is a Wyckoff schematic on seconds time frames. Now, even if you did not see that, what do you have right here? You have a 1, 2, 3 drive, break of structure, retest of this area, and you move down. So even if, let me mark this out for you guys. This is basically a schematic inside of a schematic. So this UTAD itself is a seconds time frame schematic. Now, if I had a seconds time frame, I'd zoom in, but you can clearly see the buying climax, up thrust, buying climax, automatic rally. You see the secondary test, you see the up thrust, UTAD, test, and we continue down. Okay, I don't have to mark that out, but even on the 1 minute, you can see this overall schematic here that's happening during this time. So let me go ahead and mark this up for you guys. All right, so we have our primary supply. Basically, what this primary supply means is this is the first indication that supply is coming into the market. Let me put this back down to like 10, bro. Primary supply, we see we have a reaction out of this area. We know that, okay, the buying is beginning to slow down in this market. That's basically what we see here. We have our buying climax. All right, we have our automatic rally. Cool. We have our up thrust. Cool. We have our UTAD, our overall UTAD here. Cool. Then we have our little break of structure. Hold on. We have our little break of structure here, because this was the last low to create these new highs up here. So we have this, and then this broke structure, and then you have this whole area that you could have taken a sell off of. Let me see, what's the best candle that looks the best in? I forgot the time frame, but there was like a good. This didn't tap you in. Let's see. There it is. the 4-minute time frame. You take an entry off the open of this candle. Stop loss right here, 3.5 pips at the top of the wick. And you just let it run, bro. So even once this high, and then we have another lower low made past the automatic rally, we have broken the range. So now your stop loss goes at break even. So once we make this new low, your stop loss goes at break even. We have this LPS that happens here, confirming more of your schematic, because this right here was just a redistribution. And then the market never came back. The market never came back. So I'm going to draw this down to where the market is currently right now. It's around over here, which is sitting about like a 30-something to 1 to 30-something right now. And personally, I did not catch this trade. I marked this area out. I was waiting for it, but I actually just did not catch it. I wasn't looking at the specific market at the time, bro. Like, I marked this area out and all, I just was not looking at it at that time. I think I was looking at something else, or I was doing something at that time, and I just missed this distribution here. And after that, it didn't really give me no clear schematic for it. After that, it didn't really give me anything clear to take. So right now, all I'm waiting is if it'll give me something up here or after this redistribution, or I don't know. I just really let it go. Once you really, like, something I learned with the psychology and trading Forex and everything like that, once you miss a trade, you can't really beat yourself, like, after missing it. You just really have to just let it go and just, just move on. So, I mean, it is what it is. But one thing I did take from this trade is I knew that my plan was correct. So even though I did not win this trade, in my head, I won this trade. Even though I didn't take it, or I didn't, I'm not in it, in my head, this is a win for me, because I knew that the market was going to do something and give me a reaction in this area. So next time, I'll be more confident in taking a trade like this. Or next time, I'll be more aware of, like, this is a perfect setup and I could take this anytime, any day. You feel me? So I mean, I didn't take it, but technically I still won. But that's how I see it. So that's just a little example, and you see how all this happened right inside of New York session, New York Open, like right here. This whole thing happened New York session, New York Open. So perfect example of time and price. So yeah, guys, just keep it simple, like I always say. Don't really complicate it that much. I'm sorry if I stuttered a lot or whatever, but I'm just trying to get the information out to you guys the best I can. So yeah, if you like the videos, like the channel if you want, whatever. I like to post more videos soon, so just keep informing you guys on like how I see the market and stuff like that. And yeah.